You're watching Mirror 7 News. Stay informed, stay ahead for more news.
Alibaba's latest earnings report has sparked a lot of discussion on Wall Street, and for good reason. The company delivered results that many investors had been waiting for, showing that it still has strong growth potential despite the headwinds it faces. What stood out most was Alibaba Cloud, which reported a 26% year-over-year revenue jump. That kind of growth is impressive, especially when we consider that the company has been navigating through challenges such as chip restrictions and ongoing trade tensions. Yet its cloud business is thriving, thanks to the rollout of new AI tools and services that are catching the market's attention. One of the biggest highlights has been Alibaba's Qwen AI model, which is often ranked among the top 10 globally. This recognition is not just symbolic. Audit shows that Alibaba is competing seriously in artificial intelligence, a space dominated by names like Microsoft, Google, and Amazon. There is also talk of the company developing its own AI chip, a move that could strengthen its independence and make future growth in its cloud business even more sustainable. Of course, not everything in the report was positive. The company's China e-commerce segment, which has traditionally been its backbone, showed a 21% year-over-year decline in EBITDA. That decline suggests that the domestic market is facing some pressure, and it could be a short-term drag on the stock. Still, it's important to note that Alibaba has been steadily expanding its international operations, which could offset some of that weakness at home. Now here's where the stock story gets interesting. Despite the strong performance in areas like cloud and international commerce, Alibaba's shares are still trading at only 20 times its estimated earnings per share for the current fiscal year. For a company with Alibaba's scale and growth trajectory, that valuation is modest. In fact, when compared with other tech giants that often trade at much higher multiples, Alibaba looks undervalued. What this all means is that the stock price today does not fully reflect the company's actual progress and potential. Investors may still be weighing geopolitical risks, regulatory uncertainty, and competitive pressures, but the fundamentals tell a different story. Alibaba has proven it can adapt and innovate, even when faced with external challenges. With its strong push in AI, cloud services, and international growth, the company is positioning itself for long-term success. So, while some short-term headwinds remain, the bigger picture suggests that Alibaba's story is far from over. If its current momentum continues, the gap between its stock price and its real underlying strength may eventually start to close. Stay subscribed for more videos.